In last video lecture, we completed question number 4. So here, today we are going to start question number 5. Following details are taken from Sri Shakti Limited, the year ending on 31st December 2016. During the year, 1,000 units are produced and 950 units are sold. Direct material, direct wages, direct expenses, manufacturing charges, out of it 20% fixed, administrative expense, which is variable and fixed part also, selling expense, there is also a fixed and variable, and sales. This is the data for the year 2016 for 1,000 units and produce and sell 950 units. Then for the year 2017, it is estimated that the production will be 1,500 units and sales will be 1,400 units. It is estimated for the next year. Second, price of material will rise by 25% and price of direct wages will rise by 10%. Number 3, manufacturing charges will increase in proportion to the combined cost of material and wages. Number 4, fixed administrative charges will remain fixed, but variable administrative charges will increase by 5%. And last, fixed selling expense will be doubled, but variable selling expense will remain unchanged. From the above information, prepare the following statement: a statement of cost showing total as well as per unit cost and profit for the year 2016, and a statement of cost of showing estimated profit for the year 2017. Now we check answer for this question. First, cost of seat of Sri Shakti Limited for the year ending 31st December 2016. In 2016, there is a manufacturing units 1,000 units as per given in first paragraph, and sales unit 950. It is also given in first paragraph. It means there is a 50 units in stock of finished goods at the end of the year. Now start direct material. There is direct material amount rupees 200 per unit. So it will be in total rupees 200. Sorry, in total it will be rupees 2 lakh. There is direct material rupees 2 lakh in total amount. There is manufacturing units 1,000 units. So it will in per unit it will be rupees 200. 2 lakh divided by 1,000 units. Direct wages rupees 3 lakh. So 3 lakh divided by 1,000. So it will be 300 per unit. Same way direct expense 50,000 units. So rupees 50 per unit. 50,000 divided by 1,000. They are the variable nature expense. We remember direct material and direct wages remaining always variable nature. Sometimes there is another variable expense which is direct expense or direct other expense. It is also considered as a variable because they are direct. Direct means that they are affecting to level of production. So here we get total rupees 550 in per unit amount. Same way in total amount rupees 5,50,000, which is considered as a prime cost. Now we have to add factory overheads. As per data given in your question, there is a there is a fixed and variable factory overheads. In factory overheads, there is a manufacturing charges or manufacturing expense. Total rupees 1 lakh, but out of 1 lakh, there is 20% are fixed. It means there is remaining 80% are considered as a variable nature. So 20% of 1 lakh, 20,000 as a fixed, and 80% of 1 lakh, 80,000 as a variable. Now to calculate per unit, divide by production units. There is 1,000 production unit. So 20,000 divided by 1,000, 20 rupees in per unit. Same way 80,000 divided by 1,000, 80 rupees in per unit as a variable. Now we have to add factory overheads into prime cost. So we get rupees 650 in unit wise and 6,50,000 in total amount, which is considered as a factory cost or a works cost. Then we added administrative expense or an office expense. Office expense or administrative expense. There is also a variable nature and fixed nature. As per data given in your question, there is rupees 50,000 as a fixed expense and rupees 10,000 as a variable expense. So 50,000 divided by 1,000 manufacturing units, rupees 50 in per unit as a fixed. Same way 10,000 divided by 1,000, 10 rupees as a variable in per unit. Total administrative expense rupees 60,000, which is added into factory cost. So we get total rupees 7,10,000, and in per unit it is 710. There is a office cost or a cost of production. Now we have to add opening stock of finished goods if given in question. Same way we have to less closing stock of finished goods if is given in the question. Here there is no any other information about opening stock. It means a stock for the year 2015. But here data given in first paragraph, there is manufacturing units or a production unit 1,000 and sales unit 950. It means there is a indirectly given there is 50 units remaining in stock in the year 2016. As we calculate here, 1,000 units less 950 units. So we get 50 units in stock. Then how much value of these 50 units? We remember it is always multiply with per unit office cost or a per unit cost of production. There is per unit cost of production is 710. So now here 50 units multiply 710 is equal to 35,500. It is a value of closing stock of finished goods, which will be less from cost of production or office cost. Then we get balance rupees 6,74,500. Per unit remains same. We remember there is no change in per unit because here we less only value of finished goods. So 710 as it is remain as a per unit cost of goods sold, and in total rupees 6,74,500. Then we have to add sales and distribution expenses. There is selling and distribution expense also given in allocation of fixed and variable. There is total of fixed expense 5,000 and total of variable expense 20,000. So 5,000 divided by, we remember here 5,000 divided by 950, not 1,000. because as per I said above in previous video lecture, sales and distribution expense are always calculated or considered for sales unit only. Here for manufacturing units are 1000 but sales units are only 950. So here if we want to find out per unit of sales and distribution expense, then we have to divide by 950, not by 1000. So here 5000 divided by 950, so we get rupees 5.26 in unit wise. Same way, total of variable sales and distribution expense, it is 20,000. Then 20,000 divided by 950, so we get 21.05. So now we have to add cost of goods sold into office cost, sorry, sales and distribution expense we have to add it into cost of goods sold. Then we total get 6,99,500 and unit wise it is 736.31. It is a total cost. Here and not written by us, there is manufacturing units are 1000 units while sold units are 950. So remaining 50 units are considered as a opening stock in next year 2000, in next year 2017. Now finally there is a sales given rupees 8 lakh. So sales rupees 8 lakh, 8 lakh divided by 950, so it will be rupees 842.11. Then we get profit sales minus cost. There is sales rupees 8 lakh and cost rupees 6,99,500. So there is a gap or a difference between cost and sales is rupees 1,05,000, which is considered as a profit. So 1,05,000 divided by 950, then we get 105.80. So this way we prepare a cost sheet for the year 2016 of Sri Shakti Limited. Now company estimate in 2017 there is 1,500 manufacturing units and 1,400 sales unit. So we have to here prepare a tender sheet or a estimated sheet for 2017. I repeat here, if there is any increase or decrease in variable nature expense, then it will be always calculate unit wise amount or in unit wise value. Same way, if there is any change in fixed nature expense, then there it is calculated always on total amount. Okay. Now we prepare tender sheet of Sri Shakti Limited. As you seen on your screen, in 2017 there is a estimation of manufacturing units for 1500 and sales unit for 1400. First we prepare a cost sheet like a tender sheet, column of particulars, column of per unit rupees and total rupees. First one, direct material. In 2016 there is direct material rupees 2 lakh and per unit rupees 200 as we calculate in above cost sheet. But in 2016 there is a estimation for 25% increase in material cost. We remember as we not in above session, if there is any increase or decrease in variable nature expense, then it is always calculate per unit wise data or a per unit wise rupees. Same way, if there is any increase or decrease in fixed nature expense, then it should be calculated on total amount rupees. Here, direct material is nature of variable. Direct material is a variable nature expense, so it should be calculated calculation on per unit wise data or a per unit wise rupees. In previous year, direct material per unit rupees 200. Here it is estimated that 25% increase. So, as per you seen in a table or a tender sheet, direct material in bracket 200 plus 25%. Here 25% of 200, so it will be total rupees 250 per units. Then multiply per unit data with production units 1500. So total material expense rupees 3,75,000. Same way, direct wages. There is estimation that in wages amount 10% increase. In previous year, it was rupees 300 per unit wise. So there is a 300 plus 10% because direct wages is also a variable nature expense. So there is a 10% of 300, it will be total rupees 330 per unit. So in total amount 330 multiply 1500. So we get rupees 4,95,000 answer. This is a total direct wages expense. Then direct expense. We remember there is no any data or information about direct expense, but direct expense is a variable nature expense, so it will remain unchanged but in unit wise. In previous year 2016, direct expense as we seen in previous sheet, there is rupees 50 per unit. So here it will remain rupees 50 per unit wise. So in total amount, there is a 50 multiply 1500 manufacturing units. So 75,000. So this way you get total prime cost rupees 630 unit wise and rupees 9,45,000 in total amount. Now we have to add factory overheads. There is a one expense in factory overheads head. There is a manufacturing expense. As per data given or information given in our question, there is a manufacturing charges will increase in proportion to the combined cost of material and wages. We remember increase with comparison of combined cost of material and wages. Here we make a work note. First one, manufacturing expense unit wise. So material and wages is to manufacturing expense. In 2016, material cost rupees 300 unit wise. Same way, wages cost rupees 200 unit wise. So total of material and wages cost per unit rupees 500. Same year, there is a manufacturing units rupees 100 unit wise. Now in 17, there is a estimation sheet. There is material per unit rupees 250 and wages per unit rupees 330. So total 580 material and wages combined cost per unit. Then what? So we get answer rupees 116 per unit. It is a manufacturing expense for estimation in 2017. But out of 160, as per previous data, there is out of 120% is fixed and remaining 80% variable. Same way, that allocation is also applied in this year. A fixed 160 multiplied 20%, it means rupees 23.2 per unit. Same way, variable 116 multiply 80%, it will be 92.8 per unit. So total 23.2 into 1500 manufacturing units is equal to 34,800 in total amount. Same way, variable manufacturing expense 92.8 multiply 1500 is equal to 1,39,200. Now factory overhead will be added into prime cost. Then we get factory cost or a works cost rupees 746 unit wise and rupees 11 lakh 19,000 in total amount. Then we have to add administrative expenses. There is a also allocation in administrative expense fixed and variable. As per information number 4, there is fixed administrative charge will remain fixed, but variable administrative charges will increase by 5%. Fixed administrative expense in previous year 2016 was rupees 50,000 in total amount and rupees 50 unit wise. But as per default rule, fixed expense if remain fixed or remain unchanged, then they are remain fixed in total amount, never remain in unit wise. And variable expense if remain unchanged, then they remain constant in unit wise. Here administrative expense of fixed nature remain fixed in total amount. It means it will remain in total amount rupees 50,000 and unit wise 50,000 divided by 1500 manufacturing units, so it will be rupees 33.33. Same way variable, there is a information in number 4, variable nature expense increase by 5%, but it is a variable, so we have to calculate increase or decrease on unit wise data. There was unit rupees per there was 10 rupees per unit in previous year. Now 10 plus 5%, it is 50 paisa. So total per unit rupees 10.5 or 10.50 for 2017. So now 10.5 plus multiply 1500 is equal to 15,750. Now total administrative expense should be added into factory cost. Then we get rupees 11 lakh 84,750 in total amount and 789.83 unit wise, which is considered as a office cost or a cost of production. Then we have to add opening stock of finished goods and less closing stock of finished goods. In 2016, there is a manufacturing of 1000 units and sell of 950 units. We already discussed in above, like this here, manufacturing units 1000 and sales unit 950. Okay, it means there is a 50 units in stock in 2016 as a closing stock. It will be being a opening stock for next year. It means for 2017 there is a 15 units multiply 789.83, which is a office cost or a cost of production per unit in this year. So 50 multiply 789.83, it will be 39,492 less closing stock. In 2017 there is a manufacturing of 1500 units and sell 1400 units. It means there is a 100 units remain in stock in 2017. So 100 multiply 789.83, it will be 78,983, which will be less from office cost. So now finally we get 789.83 rupees remain unchanged or remain as it is per unit wise, but now total expense or a total cost production cost of goods sold is will remain 11,45,259. How it is? There is 6,74,500. No, it is a previous data. There is a production cost or cost of goods sold 11,45,259. Now finally we have to add sales and distribution expense. There is a selling expense. As in previous year, there is fixed rupees 5,000, variable rupees 20,000 in 2016. There is information in number 5, fixed selling expense will be doubled, but variable selling expense will remain unchanged. So fixed expense increase or decrease always in total amount. Here it will being double. So total amount in previous year 2016 it was rupees 5,000, now double, so 5,000 into 2, so it will be 10,000. But variable nature expense remain unchanged. We remember variable nature expense if remain unchanged, then it will remain or a constant in unit wise. In previous year 2016, selling expense in of variable nature was rupees 21.05 in unit wise, which will be remain unchanged in 2017. It means it will be remain 21.05 per unit wise column. Now it total 21.05 multiply sales unit 1400. So there is 29,470. So total cost 818.02 unit wise and 11,84,792 in total amount.